Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. With interest rates still at decade highs, financial services companies are making a lot of money. At least they are if they have a lot of floating rate loans. And that's where today's income pick, Bain Capital Specialty Finance Inc., traded on New York Stock Exchange under symbol BCSF, really shines. It's a business development company, or BDC for short. A whopping 93.8% of their $2.29 billion total investment portfolio consists of senior secured floating rate loans. And this has helped Bain Capital report strong quarterly and full year 2023 results and provide investors with a reliable growing high yield distribution. Better still, it announced recently that it will be distributing supplemental or special dividends every quarter in 2024. The strong financial results, which are fueled by strong interest income, has also helped juice BCSF stock, which is up 48% year over year and 5.5% year over year. John, now exactly what is a BDC?
Yeah, thanks, Mo. At Income Investors, we refer to BDCs as alternative banks. That's because they operate like traditional financial institutions do, but unlike regular banks, BDCs don't serve the general public. They have no branches and no ATMs. They don't provide mortgages, checking accounts, or credit cards. And that explains why they have remained one of Wall Street's best-kept secrets for years. Instead, the industry has carved out a lucrative niche in the financial marketplace for small and mid-sized companies. These customers need more funds than those typically provided in a traditional bank loan. And BDCs typically lend to companies that generate annual revenue of between 20 million and 100 million. And there's actually been some really well-known companies that have gotten a boost in the early days from BDCs, and this includes Smashburger, Impossible Foods, and Lucid Group.
While BDCs are lifeline for businesses that need influx of cash, they're also boon for dividend hogs. Another great thing about BDCs is that they legally have to pay at least 90% of their taxable income to investors in form of dividends. Now, John, what can you tell us about Bain Capital?
Well, Bain Capital, as you can imagine, is a BDC specializing in direct loans to middle market companies in North America, Europe, and Australia. It typically invests in companies with EBITDA between 10 million and 150 million. The fund seeks to invest in senior investments with a first or second lien on collateral, senior first lien, mezzanine debt, things like that. Its diversified portfolio is invested across 137 portfolio companies, operating across 31 different industries. Now, by industry, its largest investments includes aerospace and defense, high tech, business services, consumer goods, healthcare, pharmaceuticals, and transportation.
Bain Capital reported a strong quarterly and full year results recently.
Yeah, for the fourth quarter ended December 31st, 2023, Bain Capital reported total investment income of 74.9 million, and that was up 3.5% over 72.4 million recorded in the third quarter of 2023. Now, net investment income was 34.9 million or 54 cents per share, which was just down slightly from 35.6 million or 55 cents per share in the same prior period. During the fourth quarter, Bain Capital invested 206.4 million in 43 portfolio companies, and that includes 56.1 million in 2 new companies. Now, for the full year, Bain Capital reported total net investment income of 297.7 million, and that was up 35% year over year. And net investment income was up 38% at 141.6 million or $2.19 per share.
And this is interesting, and I briefly touched on this as well. Bain Capital declared 4 additional dividends.
Yeah, in February, the company's board declared a first quarter dividend of 42 cents per share or $1.68 per share for a current yield of 10.56%. But thanks to a strong 2023 performance, it also declared additional dividends totaling 12 cents per share. Now that 12 cents will be paid out in 4 equal amounts during the year, totaling 3 cents per quarter. Now, with the additional 12-cent payments, the annual payout increases to $1.80 per share for a current yield of 11.3%.
John, thank you so much for your analysis. Bain Capital Specialty Financing continues to be a great BDC that is generating a lot of cash. It just reported a strong fourth quarter and full year results and declared 4 additional dividends totaling 12 cents per share that will be distributed in 4 equal payments of 3 cents per share in 2024. The outlook for BDCs like Bain Capital, especially finance, remains robust, with elevated interest rate expected to help BDCs generate relatively stronger net investment income and dividend coverage, especially given the floating rate nature of BDC's loan portfolio and increased supplemental dividends. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.